charts in. The 17th. So the 17th, again, you look at the bottom of the screen, you'll see where I'm bringing it back the 17th, 11.7. And I want you to look at something else very obvious right now in the broader market. If you look from the high to the low on the small caps, down to 10 a.m. on the IWMs this morning, right? If you look at the Dow, again, the diamonds, from where they were to where they are. If you just look at where you were on the start of 11.7, there is a monster obvious problem here. One of these markets is leading. One of them is completely lagging, right? The others are somewhat neutral. Okay, and I'm saying that neutral meaning look at the, hang on guys, sorry. Look at your high, right? That's here. Look at your low. That's right here. Real obvious. Okay. For those of you familiar with fibs, and again, guys, I'm trying to give news you can use. I'm not here this time or in this session to try to sit here and teach you everything there is about technical analysis. If you're familiar with fibs, great. If you're not, we'll get back to it. The S&P is above its 50 fib zone, but it's not back at the high of 11.7. Okay. If you go look at the NASDAQ, or the Qs in this case, excuse me, so to be fair about it. Now go look at the high and go look at the low. I'm above the 50. Not like that, I'm above 11.7's high. If I go to the Dow, the diamonds, you can see the 50 fib. You can see I'm stuck at this 76 fib, but I'm not back above the high. These are divergences. And people say, oh, the markets, I get calls all the time, hedge fund traders saying, yeah, man, the market's fixing to do this. I'm like, Jack, have you looked at the charts? Just go look at a 60-minute chart, a daily chart. Go look at a 5-minute chart. You think the world's coming to an end. You're a future trader. Oh, this is fixing to happen. Really? Explain to me, what do you see that I don't see? Well, this market's fixing to do that. Well, do you know there is a giant 100-pound weight chained around my right-hand leg right now that's going to keep it from going higher? Well, how do you know that? Because the IWMs are not running with everything else. They may, but they don't participate. The NASDAQs may go higher. In fact, it probably can go higher. But it's not going to go higher like you would if you know what a 90-10 up day is in the market, where 90% of the stocks are all up. For those of you who are trading minis, you need the market, you need something to be a catalyst. You need something that's going to push. So I used to watch, true story, and I mentioned this a few minutes ago, I knew this trader. He ran a phenomenal call room, and all he did was, look, guys, just put up the CompX and then attach all your NASDAQ stocks. All he traded back then was to that. And I said, but you're missing half the party. He said, what do you mean? And I would watch his traders. I wouldn't tell them because I was being respectful to him. I would not watch his traders and then come in and commentary. I would just listen and watch what he was doing. And the guy's brilliant. I said, but you're missing part of the puzzle. And I said, you're asking these guys to play breakouts on the comp. And I said, but guess what? The S&P just rolled over. So all your breakout trades you're calling right now are about to fail. And sure enough, boom, they would just get slaughtered, and they would get frustrated with him. Why did this one fail? Why did this breakout fail? Here, I'll tell them, oh, 80% of breakouts fail. All the hoopla, if you've been around long enough, you've heard. If you haven't, guys, I'll regurgitate a lot of this stuff later on. But at the end of the day, it was a life lesson learned, which was, you know what? Looking at these 4 charts can save you from, as a day trader, buying something or getting into something and not being aware what's going on around it. Does that mean you don't play the breakout on the Qs? Well, if the Qs is the market leader, you go back to the financial crisis, if you traded through that. I can remember CNBC and all the lines in 07, 08, 09, and everybody lined up for days in advance to buy an iPhone. I'm going, we're in a recession. You're going out buying a $600 phone? And you could watch then how Apple led the market. If you go back to, I think it's 03, 04, for those you remember who BlackBerry is, you can remember watching BlackBerry lead in what was then Sears, lead the market higher. I know that seems funny now when you look at Kmart and Sears or SHLD or whatever you want to do. But I've lived through all this enough to know what happens when you have market leaders. If you can identify a market leader, you can figure out what's going to lead that average higher. Okay? And you can capitalize on it. So if all four of these charts looked similar to the NASDAQ right now, or, you know, it would be nice if they looked like the Qs, because you potentially are studying for an afternoon breakout that could be strong. What's interesting to me is we're going to the top of the hours. We're going into a time of the day, what I used to call fondly deep pockets, the last 2 trading hours of the day. And I would see stocks starting to break out as we would get in that time of day. The question is, was it a false breakout? Because we're in that midday drift, or drip as people like to call it. We're not on the opening bell right now. So I see one market breaking out, and I see the others just looking at it going, waving, and I'm like, hi. You've ever seen the Madagascar movie with the penguins in it, and they're like, smile and wave, boy, smile and wave? That's what I feel like right now. It's like smile and wave. You've got 3 penguins watching, the other one saying, well, are we going to go, or are we going to sit here and freeze? And that's what you're watching for. The beauty of this is I have, in a matter of what's been, I don't know, 15, 20 minutes, broke down for you and explaining this to you in real time, the 4 markets. You know that you have a divergence with the small caps because they're nowhere close, not even the 50 fib, the other 3 above it. That's a divergence. Oh, the market's going to break out. Watch CNBC or Bloomberg or Fox tonight, whoever you get your financial information from. And they're talking about, oh, this is about to happen in the market, about to happen in the market. I'm on a 5-minute chart, Jack. It's not this hard. If it's going to break out, then all these need to get pulled up with it. If they get pulled up, then they're going to start clearing levels. They're going to start taking out highs. They're going to start getting above the tops of channels. And by the way, if you don't know me, if you've been with me in the past, you know how this is the speed I go the entire class time. I am full throttle all the time because I'm trying to pack as much into your valuable day in this hour as I can. It's a pleasure to serve you and be a part of this, but I'm going to pack a lot in. So if I talk a little fast, bear with me. But this is the speed I go when I train traders usually. Divergence, small cap, the IWM's the bottom left, is screaming at you that, by the way, for those of you who think that things are going to go, I need to start taking out, call it fib levels. I need to take out price looking left. If the NASDAQ can lift this whole market, then let it do it. Why is it the Dow is at the lows of that box and not going with the small caps? In 4 minutes, we're going to go in what I call the deep pockets time of the day. It's called the pros day. There's a reason I call it deep pockets. It's because when professionals are coming back off of lunch, right, they're trying to make their decisions going into the afternoon of how they're going to be positioned. This is why I watch the Market Watch 4. I don't have to trade these 4 charts. I'm not trying to get you to trade these 4 charts. I'm trying to get you to understand there is a correlation between the behavior of these charts, whether it's a 5-minute, a 1-minute, a daily, a monthly, a weekly, it does, or quarterly chart if you've never looked at one of those, the broader market averages, and what your expectations should be. And at this point in time, it's hard for me to say, golly, I just can't wait to trade the deep pockets time of day. That could change in a couple of minutes. If I could see price behave, I'd be much happier. I'd love to see the S&P try to lift here and break out. What I ideally wish is everybody was together. From an educational standpoint, I love this because I have divergences. I love it because I can actually look at a chart and say, are there problems in front of me if I'm trading stocks right now? If I'm trading a NASDAQ stock and I'm following that market only, and I look at the other 3, then this could be all the more reason to tighten up stops behind it or be more nimble in my day trading profit. Or if you have a longer term position on, theoretically, and you are on a daily or weekly chart, and you saw these 5-minute time frames, but we were on a daily or weekly, and you saw the same type behavior, it might be a reason for you to consider taking some profits. For some of you, it could be a reason to raise stops. It's just being aware. The fact that condition exists on a 5-minute chart, guys, is not the end-all be-all. But most day traders tend to focus on smaller time frames. The same concepts I'm going to teach you, again, I said before, are fractal in nature. They're going to work as you move up the scale, up to a monthly chart or a quarterly chart or a decade chart. If you've ever constructed those, I have, for various reasons for investors. It'd be nice to see the S&P go. If you consider current price relative to the price of 11.7, none except the Qs are above it. How interested are you in trying to make something happen right now? So let's play the game. Let's swap the S&P, or the SPY here, to the CompX. $ comp, right? Sorry, guys. And I want you to look at the comparison of the NASDAQ composite versus the Qs. Okay, and I'm going to play the game here, and I'm going to go back and just mark what was our basic little compression type area. Okay, and I'm not going to make these perfect for the sanity of time right now. But I do want you at least have a bit of a feel of kind of where things were. Are they acting similar? Yeah. Are the price bars tick for ticks, ounce for ounce the same? No. I have witnessed times in the past where, and this is a good example of it right now, where you see, okay, look at the comp. I'm drawing the screen here for a minute. Here is the high, right, of this last 20 minutes. Here's the high, a similar high right here. I'm trying to close here higher, but I'm not getting it right here. In and of itself is a divergence. In and of itself, that is a divergence because they really should behave the same. They should act the same. They should be fairly similar, fairly close. Now we're going to deep pockets time of the day, by the way. That's what the bell's telling me. So I want to watch this to see because, well, if the Comp X fails, what's going to happen in the Qs? You could do the same thing with, the SPX, the SPY. You could do it with minis. You can do this with a variety of things. And again, guys, I promise I'll come to questions, but I want to stay focused on content because if not, I'll chew up all your time with questions, but I promise I'll get to them. So that in of itself, I could do this with SPX and SPY. Again, you're not limited. If I'm a day trader right now and I know this behavior is going on, what am I thinking right now? If I got in this breakout going that I'm hoping I'm catching the late afternoon breakout and I'm just getting in it early, I'm just making it happen. I'm hitting it, getting it, as they say, right? That's great. The difference for me is I have this red flag staring me in the face with the Comp X versus the Qs right now saying, you know what? It's no true story. I did the call room. I said, look, you realize there's a divergence there. It's not like this is rocket science. I realize you're leeching the Comp X, but you do realize there's a divergence here for this example. And so you've got traders, you just called 5 trades in the past 3 minutes, and you're expecting these guys to get long. And this is typically what happens, guys. This is what we're seeing right now. You see the attempt at the breakout, and then it potentially fails. Again, the fact that these are failing, the other thing to be clear about, if you have a failure or something like that, it does not mean this is time to get short the market. This is not the intent. I'm not one. If you are the person who wants to pick the tops and bottoms, I'm not that type person. You can make enough money out of the market if you'll just focus on taking advantage of the trend. It took me a few years in my youth to figure that out the hard way. I tried everything else, and then I figured out my predecessors who wrote all the books 50, 40, 80 years prior, who said, you know what, if you'll just follow the trend. So let's follow the trend. What is the overall trend, by the way, today of, say, the Qs? Higher lows, higher highs. By definition, it's an uptrend. You look at the most recent lows from 11 o'clock yesterday on the bottom right chart, the Dow, it's higher lows, higher highs. The problem is you haven't preceded the prior high. Same thing over here in the small caps. You're trying to dig out. You may be even trying to base here, but you haven't dug out yet. The same thing on the Comp X, obviously. Again, you see the failure in the deep pockets. Felt like some people got a little antsy up front and pushed into some positions. That's fine. I'm not sweating that. Again, it's a lot of analysis, a lot of real time. I'm a little disturbed. The Dow looks like it wants to pull in and break that consolidated box. Break support. Once support's broken, it becomes resistance unless it can recover usually within a few bars. And I usually use 3 or 4 as my rule of thumb. I believe in all things 3. Hopefully it'll hold support here. Hopefully the market say, okay, it's deep pockets. Let's try to trend higher. The overall bias today feels neutral to bullish. The overall averages are slightly positive, but there's just not a whole lot going on. This market is not on fire, guys. So most recent trend, lower highs, lower lows until basically about a day and a half ago, and then things started to turn up. Again, the biggest divergence I see on the charts is that sister and brother, the Qs and the small caps, are not in agreement. Again, you could normally on most days follow the SPY and the Dow, and they're going to look very similar in their overall pattern. And the same thing, the small caps and the Qs. You don't have that today, guys. It's not that way. The small caps are a drag on the market. Hopefully we'll get a breakout here and the market will take off, and for all the bulls, you'll be happy. Interesting enough, the S&P's had time to digest a little bit longer and break out. It hasn't. It may work out. It may finish compressing and take off. If the one question I get, and I get it quite frequently, I get it from hedge fund traders more than anybody else's, and then, of course, people who actually do not trade the markets. They just invest or they just want to talk shop. What's the market going to do in the future? You're putting me to sleep asking me that question. You want me to predict what's going to happen. And respectfully, for those of you who lived through 9/11, it's like asking me when something's going to happen, the 87 crash or the May 10 flash crash, back in, what was it, 2012. I don't predict the future. Most people I know that try to do it usually fail, and most people are looking for things that are concrete, time-tested, and robust. This concept, guys, whether we're looking at this on 5 minute, if I go to a 60-minute of all these, and it makes it really obvious right now for you, if you look at a 60-minute chart, it's real obvious what's wrong here. In fact, if you can get the small caps to come back up, let them rally up. They're going to run into a whole lot of trouble unless you can overtake roughly this range of support. Again, I said it earlier, and I'll say it till the day I go to my grave. You need to be focused on the fact of being able to master price. If you can master price, which means support and resistance and price behavior around it, your odds of success are higher than most people on a bell curve that are in this industry. It puts you probably in the top 3 or 5% of people who actually use some sort of technical analysis of understanding. Even if you're somebody who uses fundamentals, price is the ultimate arbiter, guys, at the end of the day. There is a real problem with the Qs making these highs and the small caps not. It's a big divergence. It keeps a lid on the market. Does that mean that you could not have the S&P, the Dow, and the Qs take off and blow out and rip higher, and that then forces the small caps to come back up to, say, 150-ish? It could. I don't ever want to come across as something's got to happen. It has to be this way. There are certain situations where things must act a certain way based off of the way charts are designed, and they're irrefutable. There's nobody of 8 billion people on the face of the earth that can refute it. I would love to meet one, but we'll come to that another session. But this is not that case. I want to know if I'm a major bull that these charts are acting similar. Because if not, this becomes a small cap becomes the weight on the rest of them. And so it's a lot harder if I'm an investor or I'm a position trader or swing trader to buy off on, wow, I've got to hold this position if I'm trying to initiate a new one and thinking that everything's all clear. Well, I know it's not. And I've got friends that are brokers. That's all they do. And I say brokers as in stockbrokers, so to speak, that they're a salesperson. Oh, the S&P looks great near the highs and everything's perfect in la la land. And some of you are probably laughing right now hearing that because you know what I'm saying is true. I say, well, Mr. Stockbroker, well, what about small caps? Oh, they'll be okay. They'll come back around. I'm like, are you certain? Of course I am. I'm a salesperson. I'm supposed to tell you that. So for me, guys, all joking aside, I don't trust stockbrokers because it one point really early in my career was what actually got me to trading for myself because it was fed a line of whatever. And so I decided to take matters in my own hands. And so I did. And now I'm here talking to you incredible people. So do not ignore the fact that small caps are complete total divergence. And that's on the 60. If I walk out to a daily, oh, they had a huge run up on the daily chart. Scott, what's your problem? You're just a bull. I mean, you're just a bear. Everything else is a bull. Be quiet. Leave us alone. I said before, I deal with the reality of what the charts tell me. If the charts say, hey, we're going higher, I'll go higher with it. But if they're going to go higher, there are things on the chart that must happen. They absolutely are indisputable that must happen in order for you to tell me that price is going to appreciably go higher on a trend basis. In fact, they're quite indisputable. This is not the session to get into that information because we don't have that kind of time frame today. You have charts near the highs. On a short-term basis, again, I'm going to go back to a 5 minute, guys. Do not let the 5 minute be the end-all death nail of your life. But it's really hard for me as a trader to go, woohoo, can't wait to go higher when I've got one chart breaking out and everything else is stuck in Melee's land, so to speak. So you're seeing the issue of things trying to break compression on the S&P here is just trying to break down, right? You have charts that are not all near their highs in them trying to break out in tandem. You have the Dow, as I talked about a minute ago, that is breaking a box. This is the reason I mark charts up, so you can kind of see what I said, where things were, where they are. I kind of tend to do it like a story. There's a beginning, a middle, and end. There is your past, right? There's the present, and then there's the future expectation of what should happen. And so I watched day traders lose their shirts. I've watched investors lose their shirts. I'll tell you one more quick story, guys, and I'll try to get away from the stories. I have, we'll just call it a acquaintance. And I always hear, if I had your money, if I had that money, if I had this much money, I could make a ton of money in the stock market. Okay. I've known people who've taken 10 grand to 7 figures. I've also watched people who had 20 or 30 million go flat broke. And I'm not exaggerating that number. I think it's about 23 million. An acquaintance of mine had a professional career, wound up in a unique situation, big lump sum of money given to him, and thought he would be the day trader of the year, take his 20 million and turn into hundreds of millions of dollars to get this notoriety and everything else. Long story short, he blew it all up. If you're ever in that situation and you get down to your last 5 mil, do me a favor, go sock it in some sort of fixed income and go retire and leave the markets alone. Because all that tells me is that somebody had no discipline, no system, and no approach. And again, I'm in the Southeast US. If you know, and I'm not going to sit here and hit you guys with Alabama football and their rankings. Whether you like Alabama football or not, whether you like Nick Saban or not, the guy is truly becoming a legend. He has a process. There's a reason they're always that the University of Alabama is always in the hunt in football. There is a reason they are there. So they have a system. You don't accomplish what few coaches in any sport have ever accomplished, the John Woodens of the world, and not have a system. If you think you're going to have success as a trader and not have a system and have an approach and stick to it, again, I watched somebody lose everything they ever made, 20 plus million, because of a lack of a system and a lack of approach. And again, I did not work with them. When I found this out was, I wasn't somebody he could have come to for help. But it's just sad to see somebody do that. And so I always hear, oh, money solves the problem. It does not. So if you can be disciplined at any aspect of trading, whether you day trade, you're investing, you're doing futures, I don't care what you trade, guys, whether it's currency, if you'll just get systematic with it, you'll be a lot better off. Again, the cues, the divergence was obvious. The S&P breaking compressions not helping. The Dow breaking down here, just a pinch. I say breaking down, it broke support. That's that little box. If anything, in theory, it should try to retest that support and either recover within 3 to 4 bars outlier, or when it retests, it should try to move back down again. I have not spent time drawing channels and everything else I can do. I can literally the charts up. I use the 50 fibs, guys, or these Fibonacci charts, the fib retracements, to give you some perspective. I love clean charts. I do not like them busy, because then the brain's trying to process. Your brain is wired to process 3 things at a time, basically. Think about your phone number, guys. That's the reason they're designed that way, so you can remember them. Please do not complicate what is rather simple. So I'm going to try to, because we've got about 15, 18 minutes, and we'll leave time for questions and some review, whatever. And I want to show you one more thing before we go to that. I need about another 5, 6 minutes, and I'll go to questions that are on here, and we'll go from there. Please do not fall in the habit of saying, well, I'm just going to look at just one of these because that's all I need. No, you need all 4 of these. They will give you balance. I don't care if it's your investments, right? This will work on weeklies, monthlies. In fact, let's just jump to weeklies just for a second, guys. Here's the weeklies. Right, well, man, look at that, Scott. These seem to go up, for forever and ever and ever. And in 16, we had like that double bottom and everything else. You're right, we did. So let's go to monthly. Now look at Scott, we're near the all-time highs. You're worried about the small caps. Look, guys, in the big picture, if I'm an investor and I'm looking at the monthly chart of that, okay, higher lows, higher highs, I get it. I'm not looking at a 5-minute chart and telling you to go sell your holdings. You need to leech, blood-sucking leech on your body. You need to leech the time frame you're going to invest or trade or do whatever you're going to do on. It's real simple. Don't complicate this, please. I see it all the time. Well, I'm using a 200-day moving average. Well, how close to 200-day moving average are you? Oh, I'm at least 30% away from it. Then why are you looking at it? other than know where you are in the trend. It's amazing where common sense goes away when money comes into play. The Q's pulling back, not the end of the world. It's going to try to hold support out of that little compressed breakout, or at least it should. We'll see if the S&P can finish a compression or consolidated type area and try to break out again. See if the Dow can recover. You could still have the Q's and the S&P in theory break out and take off, and have the Dow recover that box for the next couple, I don't know, 2 bars, and then recover, and then have the small caps finish consolidating and break out and go to the 147.50 area approximately. Again, if you don't know this, price is an area chart. That's what support resistance is. It's not an exact penny. Everybody wants to say, at 235.60, I got to get long. Okay. Well, what happens if your data feed's got a bad quote? There's plenty of data feeds, guys. They're not all accurate. There are games that get played in the market. Have a system that's robust enough that a penny is not going to make or break your career, please. I'm going to always give you little sage advice along the way, because it's the things like that that tend to help traders sometimes. So the Q's holding a little bit, trying to break. Like to see the Dow hold here, come back up, and see the S&P. Here's the sad part. People say, oh, well, see, it's holding up now. It's trying to go, Scott. Yep. Here's the problem. If you were a day trader, I'm going to enlarge this, guys, so don't freak out because your chart just exploded out on the screen. But I'll make something really clear to you. If you were a day trader and you played this breakout, right, and you've been playing it roughly here, and price pulls back, and your stocks tend to leach to the NASDAQ or the Qs, everything your breakout just took just got given back. It's hard to be excited about that. When I think of breakout, I don't think of, hey, I went up for a little bit, and then I pulled back really hard, like almost more than 50%. That's not my idea of a good time, and it's not going to be yours, because that's not what's going to make your bread and butter every day, so to speak, or the meat and potatoes. So obvious takeaways here, and then I'm going to show you one more thing, and I'll go to questions, and we'll wrap up. What do we have here? 4 charts, 4 major averages. Let's do some math here. Why did I pick these 4? Well, because they're widely popular and widely discussed. The S&P is the professional market. The Q's is the technology world. The Dow is, well, it's the old fogies market because it's 30, whatever. And then you have the up and coming, this is where the future growth can come from, the small caps, right? So what you're looking at here is the 500 from the S&P, 100 from the Q's, right? You're looking at 30 from the Dow, and then 2,000 roughly from the small caps. So you're looking at 2,630 potential items that are considered to be, quote, widely followed out of some 8,000 symbols in the U.S. stock market, of which probably half you would never touch or trade because they're not liquid enough. It's a really good summary of what everybody's looking at, and it's also the headline number that the public is given at the end of the day. The S&P closed this way, NASDAQ was up, had a great day, or the Dow was down 300 points. What in the world happened? Is it the end of the world? Let's get CNBC on a roll, and let's have 24/7 coverage. I'm making light of this, guys, but you all know, if you've been around long enough, you know the drill by now. If it's a crisis, CNBC is going to cover it. So respectful of them, I'm glad they do what they do. You know what makes the market watch for. If you will watch them, and again, I've spent roughly, 35 minutes on this with you guys, you will find really quickly you can see problems coming at you in advance. You will see when something's not right, or if things are trying to turn around, or if you see divergences. Hey, what do I do now? Well, do you trust the divergence is going to resolve itself in the direction you think you're supposed to go? If you were a day trader and you trade equities, you can take this information and you can correlate it in a way of saying, hey, so long as this is happening, I'm okay staying in the position. But if XYZ happens with these 4 charts, then I'm going to tighten up stops. If you happen to trade currencies, you will find correlations. If you're a currency trader, and you probably know this, but if you don't, anyway, there'll be correlations at some point in the future you will find between, say, how the minis are doing, or the S&P, or the Qs, whatever, and you will find that you can actually watch for divergences during the day with currencies with major averages. I'm not going there. It's more advanced. You don't all trade currency, so I'm not going to spend the time, at least at this duration, going through it. The S&P is back at the high of the range at the moment. The Qs are trying to still lead the market. The small caps need to break out of this. The longer it bases, the easier it's going to be for it to break out and try to go near the 147.50. The Dow, within 3 bars, if it can close right back inside that box, is considered a failure to break down and recovery. I am a big believer in all things 3. At some point in the future, I'll discuss that more at length. All right, so we've done this. We'll let that play out for a minute. I want to do one more thing with you, and then I'll go to whatever questions I can see. I'm going to use Goldman Sachs. I'm going to use Morgan Stanley. I'm going to use JP Morgan, and I'm going to use Citigroup, right? Bank stocks, brokerages. Better yet, let's not use Citi. Let's use the XLF, the financial spotter. Now, what do you see? Same time frame, 11.7, okay, to where we currently are. I see things that were high on 11.7. If I look at where price relative to that point in time is, which one of these is the least weak? You don't have to answer this in the text. I would love to do a lot of that type stuff, but for brevity of time today, I'm going to go ahead and tell you it's the upper left chart. By the way, I'm coming at this completely blank. I did not pre-plan what 4 charts I'd pull up, so I'm doing this like I'm doing it in real time as I do it for myself. How do I know that? Because if I look at the high to low, and again, I want this to be really simple where I'm not going to say, let me draw the high to the low. I don't mind it. If you go to the high of Goldman 11.7 to the low of 11.8, and you look at where price is now relative, if you do the same thing on all 4 of these charts, if you think about that like a some sort of gauge, again, I'll use the 50 fib to make this easy. You will go from here to here. What will you see? I meant the 50 fib. If I do Morgan Stanley, I'll use Morgan Stanley as my proxy for the others. Where are we in relationship? We're barely through the 23. We're not to the 50 fib. None of the bottom 2 are there either. They're not. We're not sitting on the lows. JPM is the weakest of everybody because it's closer to the most recent low. The XLF's a little bit stronger, right? And the XLF is made up of, I don't know how many symbols now that comprise what the XLF actually is. But the XLF is a good synopsis of the financial spiders. If you happen to trade ETFs and you have ETFs and that's your livelihood, the same concept here I'm doing, you could do with the underlying equities that make up that ETF, and you could find your leaders or your laggards. You could see when your leader is starting to be the laggard and when that market's going to potentially run into a brick wall. Again, that's more of a more in-depth conversation analysis, but I wanted to leave you with something for down the road, which is analyzing, like we do the Market Watch for some basic divergence and information within just a basic subsector, as I mentioned. So if I happen to know financials are what's going to, quote, lead the next bull market higher, as they usually say, based off of some analysis done decades ago, that's what usually leads. If that's what's supposed to lead, is it leading currently today in the rotation of what the money's moving in and out of? No. But which one is the strongest of these? Of the big brokers, JPM, Morgan, and Goldman, right? Goldman's, if I'm going to try to be bullish, then it's the leader. The others are laggard. So what's going to happen here? Either Goldman's going to get pulled down with the birds of a feather, Morgan and JPM and the XLF, or it's going to try to pull the others up and lead them. Maybe not today, maybe tomorrow, who knows when, but it's not hard to figure out. If I'm going to drop it to a 60-minute time frame of this, just to show you something real quick. JPM was ugly, right? It really got hammered down back in support, has a nice rounded top, based out, and then fell apart. XLF, much the same. Basically trying to fill some unfilled gaps here, it looks like. But Goldman continues to behave. I'm going to drop to the daily real quick, just a little different perspective. I know the 50 fibs are kind of in the way for that, but I need to leave them there for a minute. But you can see we've had these nice runs up, higher lows, higher highs. And all of a sudden, now we're attempting to make a little bit lower low, lower high on JPM. Just some brief analysis. That's all this is. If I'm trying to get long these things, then I'm trying to buy the dip before the next move up. Then I need to find support. I need price to stop moving lower for it to move higher. Please, I feel free to dispute that anytime you want, but it's an absolute fact. You can't stop. You cannot start going higher and you stop going lower. Well, that's obvious. The funny thing is, people say, well, it's obvious. It's so obvious, but you don't do it as a trader. Oh, I got to buy the bottom. No, you don't. No, you don't. We're almost out of time. All right, I just wanted to leave you with that so you know the way of looking at these things. I'll go back to the S&P, and then I promise I'll go back to questions, guys. I'm sorry, but lots to cover, and I don't ever want to leave you guys not with something tangible. but it looks like we're getting the breakout of support or this base structure in the small caps. Definitely held up, recovered. Again, we kind of closed back in. Still a little weak compared to everybody else, but the leader is still the NASDAQ and the S&P. Let's one more thing. Where are we trying to target to right now? The top of the S&P, right? Meaning look left. That's your target, guys. That's where you're trying to get to if this continues to go. This is going to keep trying to go higher within its channel. If you don't know how to do channels, I'll do that some other time, but it's not hard to figure that out. The Dow just needs to try to hold in here. And of course, this is going to try to go back to the next level of resistance, which should be right around that 50 fib or close to it. All right, with that, I got to look at questions. I'm so sorry. If you've got any, please fire them out. If I've missed any, okay. Yes, it is recorded. In any time frame. I'm sorry, Nina. I see that on the time frames. 3 bars. I will, in a future session, I will address this. But if you don't know this, guys, you may find this more valuable than I've taught you today. I've done a lot with this. My traders over the years have cut it all things 3. If you break a level of support, a channel, a breakout or a breakdown, within 3 bars, maximum 4 and extreme 5. I'd be really careful with that. So I'm going to leave it at 3 and I'll go through exceptions some other time. You should break down in 1 bar and recover within the next 3 back into the level you broke down from. If you do, and let's say it broke down and you got short, bells and whistles and fireworks should go off in your head that something is wrong and you've gone the wrong direction. Statistically and historically. And if you look at this, you'll find it to be true. It's not something I read in some book somewhere. It's not something a mentor taught me. It's something I figured out after years and years and years of doing this, and it has a lot of value. But it works on any time frame. What else? So I hope that helps. Guys, I know we're running up against the wall in time. But it is recorded. You'll get to go back through it. If you missed it, do not sweat that. If you have questions, please pile them in. I appreciate you not just pounding me with them. That helps me so I can focus on material and content. What else? Interesting, the Dow right now is struggling to make headway. And it's interesting the S&P is struggling once again. But again, it feels like a lackluster market. But we are in the deep pockets time of the day, so don't ignore that information at this point. I appreciate your attendance. I appreciate your time today. I've enjoyed it. And anytime I can help, guys, don't hesitate to let me know. Glad to do it. Work with this, play with this, watch it, regardless of what time frame. Do your own analysis with it. Lay your indicators over it and just see what your expectations are. Don't just say, okay, I learned something new and not utilize it. Spend some time on it. I'm glad you enjoyed the session. Thank you so much. Again, we'll get the recording out at some point. Just bear with us. And but I appreciate your time. I'm trying to be mindful of your time, guys. It's keeping it to 1 hour and not over. And again, I said at the beginning, if you missed it, I tend to talk really fast, but it's because I'm trying to give you as much value for your time as I can get in, because I know your time is valuable just like everybody else's is. Appreciate that, Howard. Thank you. But I look forward to the future with you guys, and anything I can do. If you have specific topics, I'm always game for whatever you want to hear. I don't want to make the Market Watch 4 a one-off event. I'm not a big believer that you can teach somebody something one time. It's like riding a bicycle and have it mastered. Mastery comes from doing something repetitiously, guys, again and again and again and again. So thanks, Melissa. Anyway, something different. It is equities. Again, it's not futures, but again, the application can be used in a lot of different ways. Spend some time with this, guys. When a market's really kicking in gear, the divergences are going to show up in the real time to tell you the market's getting tired. And I say tired if you're an active trader, or even an investor. It will start to rear its head on the charts if you would just spend the time to use this information. With that, any more questions? If not, we'll wrap up here and I'll leave you in peace. So you guys have a very blessed day, and I'll look forward to talking to you guys coming up in the future. Yeah, repetition's a big deal. If you'll do that, the traders I have who have psychology problems, and I've yet to have one that I work with that typically doesn't. I'm saying that jokingly, but seriously. It's usually because they fail to stick to a system and to a plan and the repetition. And I've done a lot of research in the past 4.5 years that no one knows about because I haven't revealed all the research. But it's to help traders, bottom line, at the end of the day. And I've had to do a lot on my end to get the research completed. And I'll tell you, repetition's the key. That's the short answer to it, okay? So it tickers again, like the SPY is like, that's okay, Barry. Use, like with TradeStation, SPX or $SPX. With the Qs, there's the CompX. They've got them for the small caps and the Dow as well. You can use the INDU for comparison. I know you're all on different platforms probably. You'll just look, you can Google it, you can find out through which platform you're on, and you can just find something that's going to mirror it. I tend to favor the SPY, the Qs, the Dow, the diamonds, and IWMs. It's just what I've started with, and it seems to work really well. It tends to not, it seems more stable than using their sisters. But if I want to compare two things, I'll compare the SPY to the SPX. So for instance, hey, Joe, how you been, man? It's good to hear from you. Been a while, hasn't it? All right, guys, y'all have a great evening. We're out of time, and I look forward to the future with you guys. Thank you so much. Bye-bye.